Peter Galbo is head of consumer staples equity research at BofA. Peter, it's great to see you.
Thanks, Kelly. Great to see you.
Let's start with why you think food prices are going to stay high.
So, Kelly, our call actually isn't that prices are going to stay as high as they were in 25. You had a number of discrete factors across certain commodities. We called them the 4 C's or the 3 C's in the report out this morning, cocoa, coffee, and cattle. You had tariff-induced pricing that was going in place. That seems to be a tailwind for next year as those start to fall away. Cattle alone had some tariff dynamics, but also just some fundamental cases as the cattle herd continues to decline. Again, it's not that we think prices won't be significantly lower next year. It's just they're going to be going up against very difficult year-ago comparisons. And so we'd expect a little bit of relief in some of the key commodities.
So you think, in other words, that we start to get some, it would make sense we start to get some price relief. In some ways, I'm surprised it hasn't happened already.
So you've heard it now in the past couple of weeks from kind of the two bellwethers of the food group. And the question for 26, particularly for the food and beverage companies, is going to be, do any of the deflation and some of their input costs get competed away? You have General Mills and PepsiCo who have now come out and not only said that they're going to lower prices on products, but actually start to enact that in place.
Wow.
The real question, as we heard from ConAgra today, they're still taking pricing in certain categories, is are they going to have to turn around in 6, 9, 12 months time period and basically reverse that?
This is hugely positive for consumers, obviously. Look, sorry to the companies, but this is the COVID unwind still, don't you think? It would make sense at some point that once you get away from this period of incredibly high inflation and rising inflation to something a little bit more steady, they're going to have to start. Even anecdotally, I see receipts coming home from the grocery stores where people are saving $2, $3, $4, $5 on these kind of big box, big brand items. And you think, this doesn't feel like a one-off. This feels more like a reset.
I think that's right, Kelly. And look, if you look at what we published today, we titled our note, K is for cookie. We're talking about the K economy. We're looking at the low-income consumer. These are daily use categories when we talk about consumer staples. And, unlike other consumer verticals, whether it's restaurants, retail, hotels, the high-income consumer doesn't necessarily consume more daily use categories just because they feel good about the economy, but low-income consumers certainly can consume less. And so unless these companies are going to give them a break on pricing on certain products, we think that volume drag from low-income continues to be a headwind. So that'll be, the real telltale sign as we pivot into 26.
Yeah, your top picks for next year, you have Coke, Monster, and what's cocoa?
Cocoa is the Vita Coco company, coconut water, the only beverage category that's probably rivaling energy drinks at this point in terms of growth rates. Really more of a structural tailwind as not only a before workout drink, a post workout drink, a post maybe night out drink for some folks. So it's really had more of a structural growth story behind it. Was a tariff loser that now becomes a tariff winner as coconut water gets exempted. And so we like the stock heading into 26.
That is fascinating. The fact they're publicly traded, that they were exempted from tariffs, and that this wasn't a 10 years ago story. Any point of view, Peter, I don't know if you cover Lamb Weston, but what a huge move and a shocker there.
Yeah, we do cover Lamb Weston. I think coming into the quarter, the expectation was that there would be better margin improvement. The sales actually came in about in line with where the street was and what expectations were, but really the margin improvement and the margin outlook for the back half of the year, particularly in some of Lamb Weston's international markets, has been relatively disappointing. And I think that's what you're seeing reflected in the shares.